Hello guys, welcome back to my channel. Today I will talk about the trade that I've today basically I'll talk about three scenarios. One would be the trade that I've taken today, trade that I've executed on. Second would be two possible scenarios where I could have executed the trade, and one that I missed that I will discuss for, during the video that I'm making. And third would be how to handle the mindset, the emotions that we go through, kind of fear we get, the fear of missing out, what to do when you miss the trade, what to do when you miss the opportunity, and how to handle this when the market is moving rapidly. So let's jump to the first idea, first trade, first point that I have just told you. Okay, so when I came to the chart, I saw this candle, the current bullish candle. It was bearish, right? This it was basically creating a bottom wick. So what happens here is price came down. This candle, it pushed down. It closed a bearish candle, and the next day candle, which was basically yesterday, it created a support, so it closed bullish. It means the possibility of the next candle to wick down and continue pushing to the upside, it becomes higher, right? So perfect, let's jump to the 4 hour time frame. So on the 4 hour time frame, when I came to the chart, I saw, I think I was somewhere on this candle. I need to check the lower time frames, but I was somewhere on this candle. So when I saw that, okay, price created a support, this candle broke the support and it started pushing down, and probably we are getting some sort of a retest to this support area. Let's jump to the 1 hour time frame and see what information that we have. On the 1 hour time frame, we I think when I came to the chart, we already created this support, and this candle basically has closed bullish, was closed bullish. Let's jump to the 30-minute time frame. 30-minute time frame, we have more information. We have 30-minute support form, and as I came to the chart, I saw this was a support form, and everything 4 hour and daily candle were bullish, sorry, bearish. So I thought maybe we are already creating a, this kind of a downtrend over here. This probably you can call it a session trend. Overall trend is bullish. So there are two types of trend that I usually look after. One is a overall trend. So if you talk about daily candle and 4 hour candles, those are the higher time frames, and overall the gold is bullish. Anyone can easily say that after looking price on high time frame. But there is one more thing that we call a session trend. When we are in the session trend, the price may move down, and then it found the support, and then it keep on pushing up. But during that one session, you can see price may be retracing. It may be creating a resistance and pushing, creating a lower highs and lower lows. So same thing was happening in this area, where price was creating a lower highs and lower lows, and then I said that, okay, if we are creating a lower highs and lower lows, this might be we created a support, a resistance, and price might push down, and break below this and continue pushing down, which eventually it did later on. If you see this move, this was a good sale setup. I will talk about that, but let's talk about this setup. Yeah, this was a perfect setup. I think I missed this morning. Many of my friends, and some of the members in the community, they have executed on this trade, because yeah, this was a perfect impulse entry, and I missed that. I was watching the move and I missed this trade. The only reason that I did not, or I hesitated on this trade, because I thought that maybe this candle, it created low. This means a resistance has formed. But if you look at the price action, this candle, it has a bigger body, bigger wick, and a smaller body. It means the probability of price going down has become going has become lesser compared to price going up. And what next candle did, it just started breaking the high, and your best entry would have been, as soon as this candle breaks the high, your stop loss would have been below this candle, and you would have executed a nice 30-35 pip, and you would have secured all this profit if you had executed on this trade. But that's okay, I did not execute it on that. I waited. I basically wanted this price to print something like this at this. If this had the price action formed like this, then I would have definitely executed by right at as soon as the next candle start. I would have executed on that candle and keeping stop loss below that. But what happened is, this was a good impulse entry, and impulse entry, we usually I execute on impulse entries when you see that price would, keep on pushing up or down, and I would not wait for price to close. And I missed this trade. Okay, then later on, I was on the chart, then I saw that, okay, next candle. Okay, so here's the thing. Now, when you miss this move, there is no reason that you have that you should execute a buy over here, because this is a very bad buy. Since if you execute buy on this, if at this point, then your stop loss become very big. It would be like 40-50 pip stop loss. Since this is a 30-minute time frame and we are talking about gold, the stop loss would be big. And whenever price go away from this zone, the probability of price retrace and create a support, it becomes higher. So whenever you miss the trade, just wait for the pullback and price to print exactly the way you want price to print. Otherwise, let the trade go. So I was waiting. I waited. I thought that, okay, maybe this candle created a resistance and we should form a support, and then price continue its bullish momentum. But instead of uh, continuing its bullish momentum, what price did was, price created a resistance, and it starts creating a lower highs and lower lows. One more thing that I looked upon during this, yeah, I wanted to execute on this. This was a good sell opportunity that I also missed on this trade. As soon as this 15-minute candle break the low of the previous 15-minute candle, you had this support was there, which was around 30-40 pips. I would have kept stop loss above this, but I think I was caught up in something. I was a little bit busy, so I could not execute on this as well. And the next, another good setup, and how we should analyze the higher time frame. So this is a second scenario. So for first scenario, this is a second scenario, and in the second scenario, that we had, this support on 30-minute time frame, right? And now I'll show you how price action looks like on the 1 hour time frame. So this is your 1 hour time frame. So 1 hour time frame, you have this support, right? So if you now, just after looking at this price action, you can say that this was your support earlier. This price break the support, and it created a lower low. Price came up, price created a lower high. So see, price first created a high, then we created a lower high, then we created lower low, then we created a lower high, and again we created a lower low. What the next probability of price going down becomes high, because since we are in this structure, price should create another lower high, and it should go down, and price did exactly the same that we are seeing over here. So price created a lower high, and your next entry would have been just as soon as this candle starts breaking the low of this candle, and you would have executed a sell, and price went a good 70-80 plus pip in your favor. But if you look at the 30-minute time frame, then you would say, oh, we are at the support, we have another support over here. And even if you just say that, okay, if you had executed the trade at this moment, this range to this support becomes very small, which is around 16 pip. And how you're going to execute on such a small range. So here is one more thing that I would like to point out. Whenever price is making a structure on a higher time frame, they usually nullifies the support and resistance on a lower time frame. And what do I mean by that is, in this scenario, the most important and the deciding factor that becomes is the volume. If you have enough volume in the market, and if you are seeing a higher time frame, this is a 1 hour, 1 hour is a higher time frame, and if you are seeing 1 hour time frame is creating a resistance, a lower highs and lower lows, and if we have found some price action something like this, and even if we have some sort of a support on a 30-minute time frame over here, this support, it becomes a minor support, and this high time frame price action is going to nullify the importance of this support or a resistance in an uptrend or in a downtrend. So listen to me very carefully in this. If this was happening on the 4 hour time frame, and the same scenario that happened on the 30-minute time frame, if it had happened on a 1 hour time frame, that 4 hour time frame gains the more weight compared to 1 hour time frame. So same way, 1 hour time frame gains more weight as compared to a 30-minute time frame. So that is why this trade, whenever I see now, maybe next week or maybe later on in the market, when I see this kind of move in the market, I'll be more comfortable, taking this sale, ignoring the support that we have formed on a 30-minute time frame. I did not execute on the sale because I was not there in front of the chart, but the trade that I have executed, I will show you, and that will be our second scenario. Let me open up the price action on a 30-minute time frame. Okay, so trade that I have executed on was this. So what happened here? So remember, I told you that whenever price move away from the zone, the probability of price coming to back to this zone. So in this scenario, price moved down. This was just ignore this was a test trade, and whenever price moves down, the probability of price retrace and going down becomes higher. But in this case, what happened, we created a support right over here, right? Whenever price create a bullish candle after a bearish candle, a bullish candle after a bearish candle, it means a support form. And whenever candle creates a bearish candle after a bullish candle, it means a resistance form. Now your this support is no longer valid. And why it is no longer valid, I'll tell you. I'll tell you why it is no longer valid. Because if it was a good strong support, this price action, this, it would have reacted to this support. It would have at least come down, come up, and retested the support, and price action would have formed something like this, and then we would have went down. But it didn't happen. This candle, it went straight down. The next candle respected the high of this candle, and it also went further down, and the next candle also went further down. So it means this area is not that importance. It has lost its importance in the market. Now we need to look for a fresh support and fresh resistance that we are forming in the market. So this become your support, this bottom part become your support, and this become your resistance. And when I was looking the price action at the moment, and I was talking to myself, okay, we created another resistance. If this candle had wicked up and break its own low, I would have executed a sale on this, because my bias was bearish, and this was a perfect price action to for price to go down. But what happened was, this candle, look carefully, this candle did not break the low of the previous 30-minute candle. Instead of breaking the low, it broke the high of this resistance, and it closed above the resistance. This is very important. You cannot take a buy as soon as this candle is closing or moving up. It's a very bad impulse entry, because your stop loss is become too big. It would be 30-40 pip stop loss, and this is really bad execution. This would have been really bad execution. So what I waited for the next candle to form. Next candle wick down, and as soon as started breaking the high, I think I was looking at the time, and it broke the high in 13 to 15 minute of this candle. Then as soon as this price break the high, I executed a buy. I kept stop loss below this, because I will tell you that what was my mindset was during this trade. Since this trade, I didn't have that much of confidence within myself, because I this trade was out of my session. This was pre New York. My most of the losses has occurred in pre New York session. So I kind of hesitant to take this trade, but I executed because I thought we have the the trade analysis behind that was, we had a perfect scenario. The candle closed above this, the next candle created a bottom wick, and it started breaking the high. It means the in volume time the trade should go up. We have clean candles to the left hand side. Clean candles, it means the see this all price action. This is a clean candle. Whenever you see a price action happening something like this is a very shady price action, and I usually don't want to be in this kind of price action, because since price can anytime reject or go in your opposite direction. But this is a clean price action. This is very clean price action, and if we are in a volume trend, we should continue pushing to the top side, and we should secure a good profit. So when this candle open up, I executed a buy. I kept my I took profit on 15 to 16 pips, and I secured the rest at 30 to 35 pips, and I call it a day. So this was a perfect example of impulse entry, and this is a good analysis, and I call it a day, call it a week with a profit. And yeah, that's it. I think one I just wanted to execute a one trade a day, and if I'm making a profit on that trade, I'm just calling it a day. I'm not, you know uh, I don't have intention to go in and jump to take another trade. So we talk about three scenarios here. So one scenario was this, which was a perfect impulse buy. Another scenario at this, where we have perfect sell, and the third scenario is this, where we have perfect impulse buys for price to go up and fill this entire range, and test this high, and which eventually it did. But all you have to do is just take your share and just call it a day. Okay, so this is all about today's trade, and now I will talk about now something about mindset. Today I've been discussing with one of my friend, and recently called me, and we had a discussion that the fear of and having a lack of confidence in trading, and how to tackle that. I think these are the issues that every trader go through, and every trader has to deal with on every day, I think day to day basis. So first thing would be FOMO. What is FOMO and how to handle the FOMO? FOMO is nothing but a fear of missing out. So the perfect example of FOMO is over here. When price moved this much, pip, price move when you see a price forming a big candle like this, and if you are entering a trade at this high, this become your FOMO entry. This become your FOMO entry. Same way, when price broke below this, and when you execute trade at this moment, it becomes your FOMO entry. Since why it is a FOMO entry? Now you talk to yourself. If you have a little bit of experience in the market, and if you know the characteristics of gold, how this pair moves, this pair has already moved like 117 pip, 118 pip, right? If it has moved like 100 plus pip, then the probability, what's the probability of next candle going down versus candle coming up and create a market structure and then go down, right? So this, the probability of this happening becomes higher versus this happening and continue pushing down. In some scenarios you will see that gold is just pushing up and up and up and down and down and down. So same, see, look at this price action. You'll see it is making higher and higher highs and higher lows. And so instead of making, if you didn't enter over here, let's just say that price broke above this, and if you hadn't enter executed a buy over here, and now what happens if you had an executed buy, you would want price to come down, create some sort of a support here and then go up. But what happens if price doesn't do exactly what you want price to do? It will go up, it create another support level, and then it will push up. It will not come down to just always. This scenario will not happen always. Most of the time it will happen, but whenever you see price sometimes do not retest the areas that it's supposed to retest, but instead of that it retests some other areas and it create a market structure at that level. So you have to be ready to understand that we are moving in an uptrend, and if we are moving in the uptrend, be in uptrend, I'm only looking for support to form, and whenever price create a support, you execute a buy, and whenever price create a resistance in the downtrend, you execute a sell. Same scenario, if you miss this entire move, and now you want to execute a sale, the best way to do that is wait for price to retrace, create a resistance. So this become your bullish candle, right? These are your bullish candles, and this become your bearish candle, and you execute a sell right over here and anticipate that the next candle keep on pushing down and create a lower low. So same like there, lower low, lower high, lower low, lower high, and lower low. This kind of market structure that you want price to create, and then you can execute on the sell. So this take a little bit of patience. It does demand some sort of a self control over you. Many of us, including me, lose control, and then we just go. Never ever chase the price action. Never ever chase the price action, because the more you chase the price action, the more losses you're gonna make. There are certain periods where you will book profit. Those will be your accidental profit. But if you wait for just that one candle to print, and if you wait for the right kind of price action, you will make good amount of money in the market, and you will gain that consistency that most of the traders struggles in their trading career. And another point that I want to discuss here is lack of confidence. So how do we get, how do we lose our confidence in the market? So there are a few things. I think the number one thing that we lose our confidence is losses. Because of previous losses we lose our confidence. Second thing would be not following your rule. If you're not following your rule, whatever rule that you have decided, maybe your rule says that I'm going to risk 1 to 2% a day, and you're risking 3%, that you become fearful in the market, and then you lose your confidence for executing the trade on the right moment. And this is what we call analysis paralysis, where because you had loss history of losses, and you're not following your rules. Maybe you are you said to yourself that I'm going to trade 1 to 2 trades a day, and now you are executing on the fourth trade, then then you're going to lose your confidence. uh, that is the reason that why most of the people lose their confidence. And another thing could be, let's just say, you don't want to you have a fixed set of rule that I don't want to trade the news, and you are trading the news, and while trading the news, you have lost a big amount of money from your account, and now you have lost your confidence, and you are taking that same trade to the next day, and you are just showing that, okay, I had a loss. You are keeping in the mind that I had one loss yesterday, which was a big loss, and now I have to recover that loss. So this kind of over risking, yes, over trading, then over risking, over leveraging, all this stuff are the things, are the issues that are there, which are responsible for, you being not confident in the market. And when you are not confident in the market, what's going to happen is you lose your confidence. And when you lose your confidence, you miss the kind of opportunity that market provides you. And instead of thinking rationally, you start thinking in an erratic way, where you become emotional in the market, you become emotional with your money. Because here is the thing here: trading in a forex or any industry is the thing which are associated with the money. And whenever you are keeping money on the line, you are taking that emotional decision in your mind, because losing money is an emotional decision. And according to the uh, according to the people, they say that you are only capable of taking 1 to 2 emotional decision a day. So making money is an emotional decision. You have to be very careful that if my plan says I want to trade one or two trades a day, then I should stick to that no matter what happens. Because if you're making losses, if you know the risk management, you're going to keep those losses small. And when you take the loss today, let's just say, if I hadn't taken a profit on this, and if I had lost this trade, I would have called it a day. I should have called it a day and come back the next day, which would be probably Monday next week, because tomorrow is going to be Sunday, sorry, Saturday. And if I hadn't taken if I had taken loss on this trade, then I would have called it a day, and I would have tried next day. This is the perfect mindset of a profitable trader. Because when you do follow your plan, when you do your analysis, then you start gaining the trust in your analysis, you start gaining the confidence, and you stop being hesitant, and you just go with the flow, as this market moves completely in harmony. And when you synchronize yourself with the market will work with you instead of working against you. I will talk about a lot of mindset and all this stuff in my future videos. Till then, that's it for today. We had a good week, we had a good run. We will meet next, probably Sunday if possible, for the back testing session. But till then, thank you for watching the content. Keep sharing, and I hope you're getting a good quality of content and education through these videos. Thank you so much.